In the concept of market structures, there are key elements that every trader must know in order to be a master of this concept. Now, whenever the market appears like this, steer clear from it and wait for a better market condition. I repeat, the market is not the best market for anyone to trade in. How did we achieve this? $20,000 to $100,000. Let's look at the market here. What's going on, guys? It's Sam Keys here again, and welcome back to my channel. It's another episode on the Master Forex Trading with Sam Keys series here on YouTube. And today we're going to be talking about understanding market structure. And with this concept, I'm going to show you guys how I flip a $20,000 account to over $100,000 while trading BTCUSD on 13th of November 2024. If you're new to my channel and you'd like to see more videos like this, give it a thumbs up, subscribe, and comment below your name and where you're watching from. Also, you can win a lifetime access to our Forex Club worth over $899 simply by watching this video to the end and commenting your best takeaway alongside your name and location. I'm going to be going through the comments and I'll pick 2 persons as the winners of this giveaway. Now, back to the video. In this video, you're going to learn what is market structure, the key elements of Forex market structure, the types of market structure, and also how you can apply the concept of market structure to maximizing your profits when you trade the financial markets, be it Forex, synthetics, or even cryptocurrency, as well as energies and commodities like XAU USD. With all that said, let's get started with the tutorial. Now, what is market structure? Market structure refers to the way price moves and forms patterns on a chart, helping traders identify the overall direction and behavior of the market. In a nutshell, we can simply say market structure refers to how price goes up or down or even sideways, helping traders to identify how to predict what is really going to be happening next. Now, in the concept of market structures, there are key elements that every trader must know in order to be a master of this concept. And those elements are lower highs and lower lows, higher highs and higher lows, equal highs and equal lows, break of structure, and also change of character. I'm going to be taking you guys through all of these concepts as we make progress on this particular video. Now, let's go further to learn about the various types of market structure. In Forex trading, there are 3 types of market structure, and I'll be teaching you about them here. The first type of market structure is called the ranging market. Some people call it sideways market. And the second market structure is called the choppy market. And the third type is called the trending market. These are the various types of market structures. Now, let's look at the ranging market and see how we can identify it on the chart. So the ranging market is a market structure characterized with equal highs and equal lows. So let's simply bring horizontal ray tool, put at the top, and also put another one at the bottom. So when we talk about equal highs and equal lows, it simply means that price gets to a particular level at the top and rejects from that level and gets to a level at the bottom and reject from that same level, not breaking the previous one. So what we mean by equal high and equal lows simply means, let's say for example, price starts at this bottom, rallies to a particular top, and rejects from there and reverses down to the bottom again, rejects from this same level, goes back to the top, rejects from there, comes back to the bottom, and you can see go back up to that particular level. So you can see from this particular screen that price is maintaining equal highs. At the top we have the highs, so let's put this equal highs. I would identify that using EQH, and also price is giving us equal lows at the bottom. I will call that EQL. That is the equal lows. Now, when the market structure is in a range like this or in a sideways pattern, most traders want to buy the lows and take their profit at the top, and also they want to sell the highs and take their profits at the bottom. However, professional traders have learned how not to get stuck inside of this. Rather, we want to see price give us a breakout of this particular structure, going out of the range, retesting, and giving us a trending market either in an upward direction or in the downward direction, as the case would be. As you can see here, we have price going into the upward direction. I'm going to come back to this and I'm going to use it to explain how the trending market goes. The other type of market structure that every trader must know is the choppy market. Now, choppy market is not the best market for anyone to trade. I repeat, the choppy market is not the best market for anyone to trade. The reason is that the choppy market does not give us a regular structure like a higher high, higher low, or equal high, equal low, or a structure that somebody can easily predict that this is where price is going next. It may be considered as the ECG in the hospital, the device used for monitoring the heartbeat rate of a particular patient, how it goes up and down, not in a regular pattern. So I'm just going to show you. It looks something like this. You can see price do this, not regular pattern. Let's continue with it. You can see it's not maintaining equal highs or equal lows. Rather, it's just going in an unpredictable manner. Price moving in an unpredictable manner can be considered as a choppy market. Now, whenever the market appears like this, it's best advised that you steer clear from it and wait for a better market condition to trade. Now let's go to the best market condition that you want to trade as a forex trader, and that refers to the trending market. In a trending market, we have two types. So we have trending markets. There are two types of trending markets. The first is the uptrend, and the second is the downtrend. So I'm going to be showing you the uptrend and the downtrend here. Now, the uptrend is characterized with the higher highs and higher lows elements of market structure. So let's get that from here. Let's say price starts from the bottom, rallies to the top, creates a high, dips a bit, creates a low, rallies above the previous high to create a higher high, comes down to a higher low, and so on. It goes above that particular level. So I'm going to give the color of the bullish market, which is an uptrend, blue. So now let's take a look at how the structure of a downtrend is. In a downtrending market, price starts from the top, gives us a low, retraces to create a lower high, gives us a lower low, retraces to create a lower high again, and gives us a final lower low. So I'm just going to expand that so that you all can see it. And I'm going to give the color of the downtrend market red. I'm going to set it as red so that we can identify it differently from the uptrending market. Now I'm going to also label all of these highs and lows so that you all can understand how they operate. So we have the high here, we have the high. At the bottom here, we have the low, and here we have the higher low for the uptrend, and we have the higher high, and we also have a higher low as well, right? We have price create higher low, and we also have price create a higher high at the top here. So this is the structure of an uptrend. If somebody asks you what is the difference between the uptrend and the downtrend, that is what I want to show you right now. For the downtrend, take a look at this. Price gives us a high here starting from the top, and after creating the high, price goes all the way to create a low right here, and after doing that, price goes further to create a lower high at the top. So we're going to have a lower high here, lower high, and after that it goes further to create a lower low. So we're going to put a lower low here, and so on. It repeats itself in the structure of a downtrend, creating lower highs and lower lows. So the difference between an uptrend and a downtrend is uptrend gives us formation of higher highs and higher lows, while downtrend gives us formation of lower highs and lower lows. We're going to go a step further to learn about the concept of break of structure and change of character. Again, if you're new to this channel, don't forget to hit the like button, subscribe, and also comment your name and where you're watching this video from. Now let's talk about break of structure and change of character. So we have BOS and CHOCH. Now, let's take a look at an uptrend, for example. The concept of break of structure and change of character helps us to identify when there's about to be a change in the trend of the market or a continuation in a particular trend of the market. Break of structure helps us to identify continuation, while change of character helps us to identify reversal, which is the change in the trend of the market. Let's start with the break of structure. We have price create a low from the bottom, price starting at the low, rallies to the top side to create a high, then gives a retracement. You call it retracement or pullback. Now, when price comes back to this particular level, it is considered as an equal high. Price may also come here to create an equal low as well, and still come here and create an equal high. But this is not what we're looking at. What if price breaks this previous high and breaks the formation of equal highs and goes above it? The point where we have price break the equal high level in an uptrend is considered as the break of structure. So we can call that BOS. Now, after price creates a break of structure, we'll obviously get a higher low and price continues to create higher highs. You see, at this same point here, we also have a break of structure. from here. Why? Because it is continuing in the direction of the trend. We see very clearly that the direction of this trend is an uptrend. Why? Because price started off with a low and moved above it to create a higher low. So whenever you're looking at the market and you have a structure of higher lows, like starting from a low and you have a higher low, it gives us a clue that price is in an uptrend. Now, it validates that uptrend when it creates a break of structure at the top by breaking the previous high to form higher high at the top. So this is what we have, the high, and then we have the higher high. Now, let's look at a situation. Remember I said for an uptrend, price has to create higher lows. What if the market from here, instead of creating higher low here, instead of creating higher low, the market dips and breaks this previous low that we have here? So let's do something like this. What if the market dips from here? Let me change the color of this to blue, showing that price is in an uptrend. When we say price in an uptrend, we could also refer to it as a bullish market, saying that price is in a bullish market. Now, what if price gets to this high and instead of creating higher low here, or perhaps an equal low at this particular level, it goes below it to create a lower low? This situation right now, since it's the first time price is coming below it to create a lower low, it is considered as a change of character. And that's where we have the CHOCH, the change of character, because the structure of that market has shifted from the structure of an uptrend to the structure of a downtrend. Now, a downtrend has lower lows and lower highs. So here we have a low. This is the high, of course, at the top. We have the high here. Price created a low, and after the low was created, it went further to create what? A lower high. So the change of character helps us to identify when there is a reversal in the trend. Also, we could have the same thing happen here. Take note of this, guys. At this particular level, you see price came to this point to create equal lows. At this same level, the moment price broke this equal low level and went down to create lower low, here is not a change of character, it's called a break of structure. It is maintaining the structure of a downtrend and it is creating lower lows at this particular level. Now let's go a bit further. Now, what if price wants to change from a lower low here, or perhaps a structure of a downtrend to an uptrend? The price won't change from the structure of a downtrend to an uptrend. What we're going to see then is price creates something like this from here. Watch this. You're going to see the market now create a high that is higher than this previous high. You can see this high right here goes above this high, and the moment we have a structure changed like this, that is what we say price has done what? A change of character from this point to here. Now we have the change of character taking place, and at this point here you have a high, and here we have price breaking an equal level here coming up to this top. So I want to ask you guys, according to what we have been learning so far, what do we then call this particular level? Is it a change of character or break of structure? Put it on the comments, guys. The first person that gets it right gets a free gift from me. Break of structure or change of character. What does this become? You can screenshot it and then you feel it. And let's see if you guys are really following. So this is all we have about the concept of break of structure and change of character. Now let's go further to the charts and see how this concept applies to the setup that we had that helped us to move the $20,000 account to over $100,000 trading on the best broker that you can see there, and that takes us to the broker that I trade with. Now, if you want to have a similar experience like what I do, you want to sign up with the broker that I traded with, the link in the description of this video, and also join our Telegram channel. On our Telegram channel, I share free trade setups like the one that I actually take, and I also give you insights on trading. And on the channel, you also get updates on our next trainings, like for beginners and also for advanced traders, and also daily insights that can help traders level up in their trading game. How did we achieve this? $20,000 to $100,000. Let's look at the market here. This is on the 1 hour time frame. We can see the price maintained a maximum high at this particular level. Let's go to the date. The date should be 13th. Now let's see how this market structure concept applies on the chart. Take a look at this. We can see that price gave us a high here and came here to create a higher low. Let's take it from the deep. Let's say we have something from here. Price came here to create a high, down here to create a higher low, and slightly higher high here. But we could consider it as somewhat like an equal high. But something happened thereafter. It created a higher low, and after the higher low was formed, price rallied all the way, breaking this previous high and going all the way to the top. So now I want to ask you guys, what we have here, is it a change of character or a break in structure? What do we have here? For those of you who put break of structure, you're very correct. Why? Because price was maintaining the structure of an uptrend. We had a higher highs here, so we had higher lows right here. We had higher lows here and price rallied all the way to this particular level. Now, after it did that, what happened next? It still created a higher low, but this time around, we had, watch here, price created a higher low compared to this, and this time around, it went all the way to the top here to create a lower high. We had higher low here, lower high, and from here it came down again. It came down to create what? Lower high. Okay, here it created a lower low. I beg your pardon. It created a lower low right here. So now I want to ask you, what do we have at this particular level here? Is it a change of character or a break of structure? Remember, this is the first time that price is creating a lower low. Before, it has been giving us the structure of a higher low. Is it a break of structure or change of character? Now, if you put a change of character there, you are correct. It is a change of character because it's the first time price is creating a lower low. So this is very easy. You can go all the way to identify how all these things apply, and it can give you a clue on what you should be expecting from the market. Price did that and came back up here and created another high right here, changing the structure of this downtrend to an uptrend at this particular level, which makes it a change of character. So if you want to get this concept very clearly, you can take a moment on your chart and identify all these structures, mark them out, see how the reversal on the chart actually play out, and you'll see very well that you're able to read this chart even much better and better. I'm going to be giving us more practical demonstrations of how this concept actually apply, because I don't want to make this video too long. If you want to get update on the next video that I'm going to be posting, make sure that you're subscribed to the channel and also give this video a thumbs up. Don't forget to comment where you're watching from. This is where I'm going to be drawing the curtain for today. Thank you guys for watching. I hope you enjoyed this video. If you did, let me know in the comments and let me know your best takeaway. Also, it helps to encourage me to shoot more videos that's going to help you become much more better at understanding the market. From the studio and the entire team at Freedom Tradehouse, we're saying thank you for watching. My name is Sam Keys and I'm always here to help.